Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Well. It's time for another one of those podcasts about money. We call it Talking Real Money because, well, coincidentally, we talk about money, really, seriously, and real things like real investing and real saving and real spending and the things you do with your dough every day. I'm Don McDonald in the Florida studio. Tom is in the Washington State studio where it's actually maybe going to be warmer than Florida. We're getting one heck of a cold front.
Go figure.
I know. We haven't had below freezing in Florida, I don't think, in 4 or 5 years.
Wow, that's a long time.
Yeah. I don't have a fireplace. I'm just setting the wall on fire.
You better go stay warm. Huddle up with some of those oranges, dude. Take care of them.
Yeah, I gotta hug your oranges.
Get those smudge pots operating.
I've got no oranges. I've got no citrus. I've lived in Florida for 29 years.
Has it been that long now? Wow.
93, yeah, 29 years.
Surprised they would have thrown you out by now.
And I've never planted a citrus tree in my yard, not once.
But the reality is you tried to leave, actually.
I've tried so hard.
You tried to, and you got kind of out of town, and then
Florida won't let me go.
Okay, it was like one of those
sucks me right
beams back in.
Or is it Florida, or is it my wife that won't let me go?
Traditional wife that... As you described her so nicely last week.
So here's the deal.
Yeah.
We want to talk about planting because...
Planting
citrus trees.
Okay.
No,
that's
we
helpful.
want to talk about planning. Planning for your future, because we've discovered over the years that a lot of you don't really have a strategy. You ever heard the saying, hope is not a strategy? Well, we hear a lot about that is your strategy. Well, I'm going to buy stocks, hope they go up. I got into this because my broker told me to get into it, and I hope it goes up. And if it doesn't, I'm just going to sell it and wait until it goes up again. Then I'll buy it when it's already high. That is not a strategy.
Or my second favorite one is things will work out.
Well, the good news is they probably will.
Well, they might not work out positively, but they work out one way or the other. So,
But the fact of the matter is, and this really does make sense, and we run into this also a lot, the closer you get to retirement, the more important it is to have a strategy, to have a plan. That's really the key. Yeah.
And yet it's not a very interesting topic to talk about.
Oh, heck no. It's not nearly as much fun as crypto.
Almost no one ever calls us and says, hey, what about my retirement plan? Most everyone calls us and says, I own XYZ. What should I do with it? Or I just came into this money. What should I do? That's basically what you want to know. But the reality is it should be the other way around. And so when I read the headline, absolutely hate this headline. Hate it.
Where did you read this headline?
This is in Bloomberg.
Bloomberg Business Week.
Mm-hmm. Which is a great magazine. I read it every week. Publication, magazine, online too. For those of you who don't want to actually, I get the actual printed version.
Because he's a Luddite.
I am. But the headline is, revisit your retirement strategy. Okay. And what they're telling you is...
But that actually kind of makes sense.
No, it does not make... It
does.
Here's why it doesn't. Because what it's suggesting and what the article says is, now the situation is... Things are so different that you need to revisit your retirement strategy.
Oh. See, I'm just thinking every now and again you ought to make sure you're on track and revisit your strategy and make sure that it's still sound based on your current situation and your future wants and needs.
And
See, that part I agree with, but so it must have been something they said that made you mad.
And it was. And it's somebody, frankly, who should know better. He knows better. Now, what his motivation to make these quotes, I don't know. But Wade Pfau, professor at the American College of Financial Services.
Wait. Wade Pfau.
Yeah. And we know he has some affiliation with a certain type of investment.
Yeah. Well, since his school of economics or whatever it is funded by
the American College
Life
of Financial Services, yeah. Mm-hmm. But here's what he said. He said, quote, "There is definitely a lot more strain now for retirees." Maybe you could get away with saying that. But then when he adds, "We're outside of all historical situations that we've been talking about for retirement." In other words, it's so different this time. It's so unusual that you need to revisit your retirement strategy. It's unprecedented.
It's not.
No, it is, by the way, and let me tell you why. Every day is unprecedented. There isn't one day in the securities markets or situation that is the same as it was, and I don't care what they say, as it was in the 1970s or 80s or whatever. But what he's talking about here is, first of all, and you already know this, on paper, you may look pretty good because you saved, you invested, maybe even have a balance between stocks and bonds, and your stock portfolio pretty bad. Your money has appreciated pretty dramatically. And what he's saying is, wow, that's really gone up. But at the same time, and here's his quote, interest rates are now lower than ever at the start of a retirement historically. In other words, you've got high security prices, so the expectation is they won't make you much money, and you've got interest rates very, very low, and they're going to go up. I mean, we'll get into the discussion about what's next, but it drives me crazy because what the takeaway is, I think, for people is, I better do something.
Well, what does he suggest you do?
Well, the specifics, and they've got Christine Benz in here, somebody that I know and I respect as well. She talks about the obvious, waiting on Social Security, not having a set amount to take out of your portfolio. At the end of the article, they suggest I-bonds, which, yes, they're paying 7%. You can only buy $10,000 worth of them.
$10,000 a year is not going to sustain you in retirement.
That's not going to be helpful. And then adding maybe foreign stocks and small stocks. Here's the thing. All of those things that they suggest, those should be done all the time. Don's exactly right. You should be revisiting your retirement plan at least once a year, but it's not. You're not reviewing it in terms of the current situation. Your current situation is about you, not about the markets. There's a plan here that is underlying, and what Wade is suggesting is it's so different this time. This has never happened before. Well, that is always true. The securities markets are always different than they were the day before, the week before, the year before. And so you shouldn't be responding to the markets. You should be responding to a change in your situation, perhaps, but otherwise, no. And that's why, Don, I just hate headline. Revisit your retirement strategy, because I think it freaks people out. They think, I don't want to own those bonds because they're going down. I don't want to own stocks because they're too volatile. What am I going to do? And you know where they're going to head. They're going to head to an insurance product because that's safe.
That's what I was getting to, because generally, I got to tell you, Wade Pfau, among all of the academics in America, is like this one voice, lonely voice in the wilderness. He's like the only academic out there who actually states that annuities have more positives than negatives, and I have to be suspicious of those claims because I've crunched the numbers so many times. I'm not a PhD economist, but Wade, I can operate a basic calculator, and I know that, for example, an immediate annuity, most of the immediate annuities right now, if you put $1 million in them, you're taking your own money for the next 20 years.
Yeah, and we
money, just your money. That's like if you put it in a mattress and you just took money out for 20 years, you would have had the same level of safety as you had with your annuity, and the insurance company got to make all the money.
And speaking of making all the money, we looked at another dramatically different annuity, an equity index annuity.
Oh, those.
We just looked at the product, and what did it make someone last year? Half of 1 point. Well, it actually made half of 1% in a year when stocks were up, I don't know, 18 globally diversified portfolio up 18. Bonds lost a little bit of money. And the reason they didn't make any money, apparently, because they traded out of those. It's nonsense.
That's the problem, is that insurance is nonsense. But Wade Pfau continues to flog the insurance horse because it's got to be because he actually has a vested interest in insurance. His school is named the New York Life School. Conflict?
And please do not read headlines that say revisit your strategy unless you don't have one, unless you don't have a plan or a strategy,
strategy.
You haven't looked at yours in 5 years. Sure, that's always time to revisit that, but it is not time to revisit it because we're in such a unique circumstance. Every circumstance is unique. That I can guarantee.
Hi. If you want to talk to us about your issues, you can do it by calling us at 855-935-TALK, your financial issues. Ask us questions. You can send your questions in at talkingrealmoney.com. You can also get some time with us at Vestry. Just go to vestry.com, set up some time with an advisor. You won't get a high-pressure sales pitch or anything. Tom likes doing those things.
I do. I love them. I think I've already had 4 or 5 this week alone.
Wow. Holy cow.
I know. Been busy.
Well, we have one of those questions, and
Please.
I think this is a pretty easy one.
Well, I'll take all the easy ones I can get.
It came in written through talkingrealmoney.com. It starts out with a nice comment. Been enjoying your show for a few months. I have $50,000 I'd like to start building a portfolio at Vanguard with. You often mention VT and BND. I'm also interested in adding VNQ and VIOX for some excitement, but I don't know at what percentages. Can you suggest allocations? I love this part. Please don't mention my name in case my investment advisor is listening. He's a really nice guy.
Aren't they always?
Code for not a fiduciary. Thanks for your help.
I'm trying to find VIOX.
I think it's the vaccine. It's the vaccine index.
That's VOX. No, that's a Communication Services Index Fund, which you
what is VIOX?
No, VOX is the Vanguard. I can't find VIOX anywhere. VIAX, I'm familiar with.
VIOX. There is no VIOX.
Okay, well, I didn't think so, but I am VIAX.
What's VIAX?
I'm trying to remember. That's, isn't it VI?
I'm looking it up.
So many of these tickers.
No, there is no VIAX either.
All right,
sir.
well, listen, okay, but let's go back. Listen, first of all, if you are going to be more sophisticated with all of this, in other words, if you want to say, I want a pretty sophisticated portfolio, the free portfolios we offer on our website, they're designed for getting going. Pretty easy to operate, build, leave, etc.
Well, so right? VT and BND, really.
Okay, but I think once I agree, VT and BND, that's what I'm saying. But once you say, I want to add in, I think you wanted to add real estate.
VNQ is real estate.
Yeah.
And I would imagine that maybe he wants to add small value, something like that,
VBR,
which would be VBR.
Yeah, okay, but here's the thing. Once you cross that river, then you may as well dive all the way in. I mean, you could go, and I know we've flogged this before. We don't get anything for mentioning it, but you could go to Paul Merriman's website and get a 10-fund portfolio if you really want to dive into this.
Well, and here's the thing. When you look at it the way you're looking at it, it's like dabbling. Well, and then I want to add some excitement. No. Investing.
BTC. No, kidding.
Investing should be boring. It should be watching paint dry or grass grow, to paraphrase Nobel Prize winner Harry Markowitz.
Direct quote, but okay.
Pretty close. I don't know if I got it exactly right because I didn't look it up. That's from memory. But the reality is, Tom's right. If you're going to start dabbling, don't dabble. Get into the water. Jump into the pool and build the right portfolio. And you could do it. But here's the thing. You could do it. Actually, you could do it with with VT, BND as the majority of the portfolio based on your stock to bond ratio, which is based on your risk tolerance and risk need. Then with that equity portion of it, slice off 10%
20,
or so.
20.
Maybe 20% of it. Slice that off and put it into VNQ and
No.
and
VNQ would only be 10. I thought you were
10.
talking about the small.
VBR. Okay.
Yeah, VBR.
VBR
Yeah,
about 20,
yeah.
VNQ about 10.
That's fine. I mean, again, I think
Of the total value of the portfolio.
total value. I mean, and here's the other thing. Again, that still feels a bit like dabbling. I mean, then just go dive in the pool, start swimming.
I
do
have
the
a
whole
better
thing.
idea, and I'm not
Okay.
going to mention your name because I don't want to make your nice advisor angry, but maybe fire your nice advisor
Here's
and
an
get a
idea.
fiduciary advisor who would
Whoa.
actually guide you through this process in a logical, academically based fashion with probably lower cost products than your nice, not fiduciary advisor has sold you in the past. It's really, this is one of those issues. It's business. This is business. It's not a friendship. You can have friends and you can have business associates. But in this case, unless this is your best friend in the world and you feel compelled to give them thousands of dollars a year
To
just
be
to
your
help
friend?
them out.
I don't. I've paid people to be my friend, but not that much.
Yeah, $100 maybe.
That's not bothered you
Buy-
there.
you buy people some drinks at the bar.
There you go.
Oh,
You be
hey,
my friend.
Tom, we love you, man, for today.
Tomorrow, not so much.
Till we go away and forget who you were. So,
Yeah, that sounds a lot like high school or something with the ladies. Anyway, that's a whole other thing. Here's the thing.
I
Here's
don't
the
even
thing.
want to go to that
No,
one.
I agree. Here's the thing. You're right. Any good advisor, if you have held away assets or something else, they should give you advice on those anyway. And it should be, as you said, correct, good advice, not, hey, give it all to me and I'll roll it into XYZ expensive fund. That's outrageous.
All right, I want to do one more.
Yeah, we got time for
'Cause
one
we've got a
more, and
minute.
then I
We've
got to
got-
get lunch. And I
Oh,
got a
no,
big
no,
meeting.
no, no.
Big meeting.
No
I'm going to be
time
there
to
on
eat.
time.
No time to eat before the big meeting. Yeah, we
During the
have
big meeting.
All right, here's one. Oh my
Yeah.
gosh. The subject is Global X Russell 2000 covered call ETF.
I got to excuse myself and go to my lunch now. So
No,
'cause
no,
you're
no,
just
no,
making
no.
my stomach upset.
Ready? I mean, you're going to love this one. You're going to love this one. Okay, please explain your views of RYLD, that's the symbol for this ETF, as a portfolio component option for a relatively consistent monthly dividend in retirement.
RL.
RYLD. It's the Global X Russell 2000 covered call index. What it is,
There it
it's
is.
a
There it
mutual fund that writes options on their portfolio. That's what a covered call is. It means you sell someone else the right to buy the stock at some date in the future, and you generate a little income from that. But you haven't eliminated market forces by any stretch of the imagination. It is not a very old fund, and for an ETF, it has a high expense ratio at 0.6% per year.
That's outrageous.
Plus, folks, in 2020, it broke even. So you got a dividend, but you lost money on the fund.
What was the dividend payout?
Well, it currently is about 1.7.
Okay. Yeah.
Not much.
That's not
It's
much.
not much.
No.
In 2021, the fund had a total return, including their income, of 22%.
I think this is what we were used to refer to as investment cheesecake.
Yeah. And then, so far this year, get this. This is supposed to be a safer
Right.
place
Yep.
to be.
Covered calls.
Because you got covered calls.
Yep.
You don't get the big volatility. You're not supposed to get the big volatility because your stock.
And
So far, year to date. Ready? Even after your dividend, -7.
it sounds a lot like, let's see, the Standard & Poor's 500 to me.
Exactly.
And you can get that for 3 basis points instead of 60. Yeah.
And the S&P 500 has a very similar dividend. So
I was going to
where's
say
the
that's about
advantage?
2%. That's. This is a product in search of a problem. So
Plus, it's a gimmick. Covered
Yes, it
call
is
writing
gimmicky.
has always been a gimmick. This is not a surefire way to wealth. It's the dividends aren't anything special.
How
Don't
big
do
is
it.
the fund?
Don't
It's got to
do
be
it.
small.
Yeah, they buy the Russell 2000 ETF, and then they write options. That's all they do. That's all they do. They don't even own individual stocks. They own an ETF, and they write covered calls against the ETF. How easy is that?
And it has according. Is this right? Only has $800 million in assets. I mean, this is a tiny little fund. So
That is, let's see, I'm just double checking on another site.
That may be old.
900 million in assets.
yeah, it's pretty tiny. Again, this is not something you need
No.
in your portfolio.
No, and anybody who's suggesting it to you is just trying to make
You don't
themselves
need
look
them in your
valuable.
life. You
Yeah.
don't need this in your portfolio. You don't need them in your life. Thank you.
And if it's an
Clarify.
advisor, there you go. Another example of when you should fire your advisor. They try gimmicks. Bad idea. Thank you all for being a little part of our get-together. Actually, a big part, because in aggregate, you guys are huge. We had 8,500 downloads one day last week. So
Really?
you
Wow.
guys are huge.
Thank you. Thank you for that.
Thank you.
Thank you for listening. Thank you for the doctor who recommended someone to us last week. That was very kind of him. Apparently, he's not a quack. Not kidding. I mean, that's really nice. That's really nice.
Yeah, doctors who don't suggest us are quacks, according to Tom.
Well, I could say that because my dad was a doctor, so I can get away with it. Right?
Is that true?
I don't
Is that
know.
the way
I
it
guess
works?
not.
If your dad was a doctor, you can just denigrate doctors? Is that
When I go in to see every time I see my doctor, I remind him when my dad was a doctor because I hope that makes treat me better or something, right? No?
And he goes, "Is your dad still alive?"
No.
Then I don't fear him.
Said, whatever. He's not going to do anything.
You're no doctor.
Exactly. Not even
Next.
close. Yeah,
Next.
exactly. Cough, please. Yeah. By the way, we want to make sure that you take advantage of our kind offer to help you. We help so many people that are not our clients, and we want to. People are suspicious when financial advisors say that they'll
for good
and
reason.
they feel they know they're going to get sold something. I will make the pledge here. You will not get sold anything if you talk to one of our advisors. Period. Exclamation point. It will not happen. We will give you an hour with one of our advisors. If you come into the meeting the way the young man did today with so much detail, wow. I mean, it was phenomenal. And he got some great work because he laid it all out to us. We read it prior to the meeting and made some good suggestions. We'll do the same for you. He's not going to be a client. Doesn't need to be a client. So let us help you. We're going to give you some good stuff. We've got our advisors. I think they still work for us, right? They don't come to the office anymore, but I think they're still working for us. So
They call
it's
in
hard
once
to
in a
know
while.
to check in. But we want to help you. You simply go to vestry.com, set up a meeting. It's that easy. And I think you'll enjoy it.
One last update.
Yes.
I just was looking through the mail,
Uh-oh.
and we got a note from a guy in Indianapolis who says MCL restaurants out of Indianapolis still have blue plate specials.
Yes. Yes. I'm not
Yeah.
completely.
They have a
Gone
blue plate
yet.
special.
Oh, there you go.
They on Monday it's fried chicken, Tuesday it's meatloaf. Southern fried catfish is the Wednesday special.
No, I am not having Southern fried catfish.
Liver and onions on Thursdays.
No.
Yeah,
No,
there
I
you
will
go.
not have liver. This is
Wait,
no.
grilled
What?
chopped steak, otherwise known as Salisbury steak, on
not gonna
Saturday,
happen.
and oh boy, chicken and noodles on Sunday for only $9.99. Are you out of your mind?
This is my birthday weekend. I'm living it up greater than that. That's for sure, by the way.
All right. So no liver and onions for Tom.
I've only had it once, and I will not have, never say never. I ain't planning on having
Oh my gosh,
it again.
my grandmother used to serve liver like
the
at least
smell
once
of
a
that.
week. You need that. You need that iron.
I was going to have lunch now, but you've destroyed it, so
How
thanks
about
a
a
lot.
grilled liver sandwich?
How about grilled bologna sandwich? I used to have those, too, when I
Yeah,
was growing
me
up.
too.
So.
All right, we got to go. Tom, go get lunch. We got a meeting coming up.
All
Thanks
right,
for being
thank
there.
you all.
I'm Don. That's Tom. We talk real money. Bye.
We hope
hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.